Okay, let me get started with the first one, guys, and then we'll proceed and proceed and proceed. Okay, so can you explain correlated pairs? Okay, it's simple, guys. When it comes to market correlation, it's simply either that correlation is positive or it will be a negative correlation. So when the correlation is positive, it means that those pairs, they are moving in the same direction at that particular moment, né? If it's a negative correlation, it means that when pair A is going up, in most of the cases pair B will be going down, né? So this is currency pair A and this is currency pair B, né? Then here it's still A and B. So in positive correlation, usually the currencies, they are moving in the same direction. For an example, let's say the reason I will not actually clearly give you names of the currencies, it is because usually correlation, it varies, né? Usually it varies. Sometimes you'll find that today the pairs are correlating and tomorrow the pairs are not correlating. That's why I gave you a framework of how to spot correlation. For an example, when you're analyzing your trade, maybe let's say in the beginning of the week, or if you can't do it every day, in the beginning of the week, you open, let's say you want to trade USD, ne? Maybe let's say USD card. You have to open all the pairs of USD card, ne? All the pairs which consist of USD. For an example, here we'll be focusing on USD. All the pairs which are made of USD, or which have the USD as a part of the pair, ne? And then you check their entire direction. Let's say you open USD card, USD JPY, you open USD CHF, you open OZ you open GPUSD, and then you analyze their trend in the same time frame, ne? You analyze their trade in the same time frame. Let's say you find out that say this is GBP, this is OZ, ne? All of them, they are paired with the USD. Let's say you find that here it's an uptrend, ne? USD is going up, here USD is going up, here USD is going up, here USD is going down, and let's say here again USD is going down. So we have three pairs where the dollar is going up, and then two of them where the dollar is going down. So what does it tell you? It tells you that overall, it means that the dollar is behaving the same when paired with the card and the OZ, and as well it behaves the same when paired with JPY, CHF and GBP, ne? So then through this understanding correlation, you will be able to spot market which are similar. You'll be able to spot market which are moving similar. For an example, this one is going up, this one is going up, this one is going up, and then you'll be identifying the structure, the patterns, are they the same, ne? Then that's correlation in details. But if you don't want to focus in details, which is permitted, which is actually something good, ne? It is just to check their direction, as I mentioned here, that if all of them are moving down, then your next role, I hope those who are old here, they remember these things, and you people neglect it. Once you spot their direction, for an example here, the entire direction will be USD going up. It means that during that week, you'll be buying the USD. And then the question is, which pair will you be buying? It is then you choosing between these three pair, USD JPY, USD card, GBPUSD, choosing a pair with a smooth flow or an understandable pattern over highs and lows, and then you take that market, you'll be trading it, rather than saying I'm buying USD card, then I'm selling USD JPY, then I'm also buying USD CHF, I'm selling GBPUSD, I'm buying OZUSD. You see that there is just a disaster, meaning you'll find yourself that you take trades which will cancel each other. For an example, let's say in the correlation is negative like this, that when USD card is going up, let's say maybe USD CHF is going down, let's say just like that. So you find yourself buying this, you say I'm buying here, and again you find yourself buying even this side, ne? You'll find that at the end of the day the trades will cancel each other, because one will be a loss and one will be a profit. So it will just delay your progress, ne? So that's how correlation works. The best way it is what I'm telling you, either in the first of the week or every single day, depending on what type of a trader are you. If you are kind of long term, you can do it at the beginning of the week. If you are just intraday or a scalp, you can do it every day, checking all pairs which consist of the dollar, if you'll be trading the dollar, and looking at their direction and try to link those who are moving in the same direction and then choose the best one, ne? It also helps you to identify the strength overall, ne? The overall strength. Those who have just joined, guys, I'm answering questions, ne? So if you have a question, just drop it in the chat box. I'm going to be answering it. So I hope it's clear. Is this about indices or forex? This is about trading. This is about trading. This is about trading. This is about trading, ne? Okay. The reason I'm saying it's about trading is because it applies in every market. But now here, in synthetic indices, this part that I'm just explaining now, it will be hard for you to apply it, ne? It will be hard for you. I advise you not to apply it. Why? Because remember, there is no real psychology in indices, ne? So the markets there, they don't move, for an example, based on what people do, ne? They don't move based on what people do, which can really make this method not to work efficiently. For an example, how can you link maybe V75? What can you link V75 with? Where can you check correlation with? Because it's just its own asset. V75 just move at its own. Even V75 1S, it's on its own. Ne? It's on its own. Then when it comes to currencies, it's the economy of the countries which is linked to the World Bank. So each pair has a relation to another, because as countries we do exchange services, imports and exports, and also as countries we discuss rates together. So it's hard for this method to work on indices, but you also need to be checking the strength there just to understand how you are going to be trading, ne? But there is no relationship between the indices. I hope that one is clear. But the information that I'm giving, just all general information, it works in every market. So if it happens that I post something and I write it forex, it doesn't mean that it doesn't work on indices. If I post something, I write it indices, it doesn't mean that it doesn't work on forex, ne? So it's the market, guys. Remember, the indices were created to mimic the real market. So same behavior, but there are those minor differences, and which, if you are serious, you should take them in mind, ne? Is it advisable to trade Nasdaq when you are a beginner? It's the purpose. It's the purpose. If you want to trade Nasdaq, you want to trade gold, you want to trade V75, I will ask you why. I will ask you why. It's the purpose. It's the purpose. I will ask you why. If you'll tell me that I'm trading it because I want to get those quick profits, I will advise you not to trade them, because you won't get those quick profits, but it will just deal with you, ne? It will just deal with you. It will just deal with you. Because a lot of people who rush to those assets, it is people who fail even to manage a risk. They depend on luck or hoping that the market is going to present me with huge returns. So it depends on the purpose. If you have seen someone flexing with billions trading Nasdaq and then you choose to go trade Nasdaq, it's not a good approach. It won't work. Let's go to the next one. Correlation. How would you know if the trend is over? It's simple. That one, we've been preaching it daily. The issue of momentum, ne? The issue of momentum. For you to know, remember, a trend is made up of two things, ne? If it's an uptrend, it's made of higher highs and higher lows, ne? If it's a downtrend, if it's made of lower highs and lower lows, ne? If it's a downtrend, this is an uptrend. So simple, the first thing that you need to spot, ne? It is these highs and lows. Firstly, for an example, remember that in an uptrend, the market should be increasingly and in strength going upwards. It should be increasing going upward in terms of strength. So if you see that the market is now not going upwards with the same strength, then that's a questionable trend. For an example, the market has been moving up, and all of a sudden you see something like this. Do you see that now it's questionable? Why? Because you now have a low which is lower than the previous one. Then that's now cancel the rule of a healthy trend, which is higher lows and higher highs. So if we don't see higher highs and higher lows, it means that the trend is questionable. The trend is questionable. Then that's when you need to, if you're buying, that's when you need to question now and say, should I continue to look this as a buy? If you're going to look this as a buy, ask yourself, why did then the sellers came in with strength like this? Because the only way we are looking to buy, it is when the strength is on our favor. It is when the strength is on our favor. So it depends. Once you see something like this, stay out of the buying side, because what makes amateurs different from professional traders, it is the simple way that professional traders will buy here, amateurs will buy here. They will buy here when they've seen that everyone has made money, everyone has been buying, they will begin to buy there. That's the only difference. So you should be able that you catch the trend as early as possible, and the earliest time to spot the trend is when we have clear signs or clear display of higher highs and higher lows, where the strength is not questionable. That's the earliest time to enter the trade. When the strength is not questionable, when we are not close to a key level, which is either a previous resistance level or a previous significant support level, which was tested multiple times. So for you to be trading the trend efficiently, you need to be trading between these key levels, not in them, but between them. When you see that the market has been moving in an uptrend and now it's approaching the resistance, you have to be staying out of the market. If you see that I've been selling and the market is approaching the previous support, you need to be staying out of the market. When I'm talking about previous resistance or support, I'm not talking about these things. I'm not talking about these highs and lows here. I'm talking about significant, like for an example, a high which was tested maybe last month or the previous day, depending on what type of a trader are you, a key level, not just those small highs and lows. So I hope that one is clear. For you to see that a trend is ending, see the strength. Once you see that now the strength is questionable, stay out of that trend. That's also the part of the one who's asking me how to analyze momentum. This is a part of it, but I'm going to get in details and I'm answering that question. It seems like there are a lot of questions coming in. Sure, if you're talking about, I can hear you. Okay, this wasn't a question. Good evening, sir. May I please get the agenda? Okay, I said the agenda. If your stop loss is more than your risk or the account percentage, do you still take the trade setup? Wow, that's a good one. If you take that trade, you press that buy and you put your stop loss, but when you try to put that stop loss, you figure out that no, my stop loss is like 10% of my capital. So what do you do? Because you have already pressed that buy. So it's simple. You have a lot of options. You have a lot of options. But usually what I do, me in my case, when I find that I buy and I miscalculated the risk, I usually just close that trade immediately. Let's say the trade was opened at $1, at negative $1. If maybe I'm going big, or let's say maybe those who are trading small accounts, it was open maybe on just maybe same $1. Just when you open the trade, it's $1. So I just close that trade immediately and I reassess my lot size. If maybe I was using a lot size of 2.0, I then see that no, this was wrong, because when I try to calculate my stop loss, or when I drag my stop loss, for example, an MT5, you drag your stop loss, it shows you the returns. I see that no, this is like 10% of my account. So I just simply chop down the lot size according to this amount. I chop down the lot size. I'll find myself re-entering at that moment again at the same spot with maybe lot size of now 0.8 if it's good for 0.8. Or the other thing, which is really a threat now, which is really not good for the price movement, because when you set a stop loss, you set a stop loss in a place where you believe that price might come but not reach that level, maybe bounce here and go up again. So you give the price a breathing space. But the next option is to take your stop loss and put it up, which is now not giving the price a good breathing space, because the price might then smash your stop loss quickly and take you out all of a sudden, going all the way on the side which you anticipated, which is something really bad. It's something evil that usually happens in the market. So when you open a trade and you see that, wow, I've used a wrong lot size by mistake, close it quickly. Close it immediately. Don't mind about losing that $1. Close it immediately, because for you closing that $1, you might be saving like $50 of your account, which will be taken by this bigger stop loss. So just close it immediately and reopen it with a good lot size. With a good lot size. For those who are trading indices, I really can't give you good lot sizes according to your accounts, but I did made a video in the past about the lot sizes. Why? Because it differs from your account. It's not like in currencies that it is fixed and whatsoever. Some of you, they are choosing different leverages and everything, so it affects you in a different way. That's why you really need to really know how the lot size reacts in your account. You have been trading, you have the history. Check your history. That last week I opened a trade of V75 with a lot size of 0.2 and my stop loss was in this level. So let me calculate the points between my entry and this level. You figure out that maybe it's let's say 1,000 points. It's 1,000 points, and this trade which you took, you closed it here at this key, which is 1,000 points from your entry, and you took a loss. Let's say it wiped my account like $78. So now from this, you will be able to figure out the calculation, saying, okay, if I am using a lot size of 0.2 and with points of 1,000, I was able to be wiped $78. Maybe for me to make this easy, let's say it wiped you $100, just to make the calculations easy. It wiped me $100 on 1,000 points. So it means that for me to be wiped like $10 next time, it means that I either have to decrease this lot size or divide this lot size, these points by 10, saying, okay, next time a stop loss, I'll make sure that it's 100 points so that it wipes me $10. Or else you decrease the lot size here. You decrease the lot size by the same rate here, by the same rate, divide by 10, divide by 10. You'll know that, okay, for me to be wiped better, then I will have to use 0.02, then it will wipe me $10 and I will be able to trade the other day. So that's how you figure out the calculation. That's how you figure out the numbers. So I hope now I won't have questions like, how do you calculate pips on V75? This is the system, guys. Just check your history, how it wiped you, how many points, and then try to calculate those points. Let's see the next one, trading view package. Which trading view package do you recommend? Okay, me, I'm using the pro, I'm using the pro, which is like basic, not the mega package on trading view, because me, what I don't need, I just need where is this thing now? This is just my chart, this is my chart. What I don't need ads. And again, I need more indicators. For an example, like around 5 indicators. And the next thing that I also need, I need 2 windows, because usually when I analyze on my own, I check time frames like the daily and then the 1 hour. So usually when I analyze personally, I check two charts like this, the daily and then my small time frame. I leave the middle time frame aside. But when I post actually just a single time frame so that it will be clear for you guys. But me, when I analyze, I just use the 2 time frames in one symbol, in one symbol like this. So it depends on what you need, so me, this is what I need. I need also these highlighters here. I also need these highlighters, the oranges and the green, for them to remind me on what I'm waiting for, ne? For them to remind me of trades that I'm still waiting for, chances of trades that I'm still opening. And also it's the issue of ads. I really don't like ads. That's why even on my website I try to run ads for a day, but I saw that no, they are really disturbing. It's like it's a spammy site or whatever. So even on TradingView, I don't like ads, ne? So the basic package for me is enough. Unless I maybe want some more charts here, for an example, four chart windows, I will then have to upgrade. And if I need like 15 indicators per chart, then I will also have to upgrade. But for me, the basic is good. So if you don't want ads, you can upgrade to the basic, which is, I think it's around $14. I think it's around $14 a month, or $10, I forgot, ne? But yeah, it's on what you need. But actual TradingView is for free, so there is no need for you to be complicating if you can't afford that $14. So I was answering that question. I'm losing track of the questions there, so man. Okay, how can I spot good entries? What a broad question. What a broad question. But I'll just highlight you in a simple way, ne? I can't use the chat because when I use the chat, it loads very, very small, ne? But I have a lot of videos on entries, ne? I have a lot of videos on entries, so you just have to check them. But simply, the right way of spotting entries, it is the method that I use always, ne? Firstly, it is either having an oscillator. Secondly, it is the must have, which is the price action, ne? The price action, more especially the issue of patterns within a pattern, and then pattern break. That's the best way to enter your trade. Firstly, oscillator, which is either an RSI or an MFI or a stochastic, ne? Making sure that before I buy, let me make sure that my RSI is below the 20 level or the 30, depending on what you are using. Before I sell, let me make sure that it's above or it's crossing the 70 or the 80, ne? This one, it works, guys. This one, it works, because even today I was just laughing alone, trying to look at the past chart data, trying to scroll in the chart, going back, and I figure out how powerful the oscillators are, because it's like they are like giving you good opportunities like 70% of all the time, ne? We are running out of time. It's like it is accurate like 70% of the time, guys. It's 70% of the time accurate. Just spotting oversold, overbought, oversold, overbought, oversold, overbought. So it's a good indicator to use for entries, oscillators. Then pattern break, making sure that if the market is moving up, it's moving up in impulsive and corrective. So when it corrects, make sure that the pattern in the corrective is broken before you enter. Make sure that it is broken, and then you enter here after it's being broken, ne? So same thing with the pattern within a pattern. It is this thing which you see, but in a lower time frame, ne? Because in a higher time frame, it's like this, ne? It's just a corrective like this, but in a lower time frame, it will be a downtrend sort of a thing. So you should make sure that as well in this downtrend, which is in a bigger time frame, this wave, it's a wave which is like decreasing in strength, and strength is shifting to the side of the buyers, and then all of a sudden the trend is broken, so then you enter. So it's all simple like that, ne? I hope it's making sense. I also think I have to upgrade this thing of Zoom, ne? I have to upgrade so that we will have enough time. Then if I upgrade, it means that I have to put this webinar frequently, because I can't upgrade and put only one webinar a week. It will be a waste of money. So if I upgrade, guys, we agree that I'm going to smash you in your faces with webinars every day. Hello, is this indices of Forex? Which TradingView package? Okay, we spoke about packages. Is there more skill or other strategies you can use except price actions? Yeah. The strategies I post, the indicators, they work. Remember last time I rebuked you guys of criticizing indicators because price action look more professional. It's not about how professional something look. It's about how efficient it is. It's about what is it adding in your account. So if price action is not adding something, take those things and throw it in the dustbin. Take those lines and use what helps you. If indicators are working better than price action on your side, then let's use indicators. If indicators are not working, price action is working for you, let's use price action. Here we are here to just we are investing here. We are looking for return. So if something is not helping us, we try to figure out the problem with it, and we don't find the problem, we have to throw it in the bin and try something else. And many use of trading view, nothing special about trading view. It's just that it's a good charting platforms. Now when you are analyzing your pairs, you see it's beautiful. It's having more tools than MetaTrader. So but in indices we have no choice, guys, to use MetaTrader because your data is not saved on TradingView. So indices, let's use MetaTrader all day. How to trail profit and where exactly should be the stop loss be or should be placed? Where exactly? Where is the chart? 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 Trailing profits, it's all about why do you draw on the screen? Trailing profits is about figuring out the same market structure. Ne? Let's say you're buying here, and then the market is bouncing back, going up, bouncing again, going up, bouncing again. Then let's say it goes up. When the market is here, then take your stop loss and put it where? Below this previous structure. Ne? It's all about identifying the lows and the highs. So if there is a new low, let's take advantage of it. If there's the new high, let's take advantage of it. So that's all about trailing your profits or trailing your stop loss. It's all about updating your stop loss or your take profit as price is progressing. Ne? If you see a new high, if you are selling, take your stop loss above that new high. If you're buying, take your stop loss above that new low. I can't hear what you are saying, please. Oh, Jesus Christ. If you can't hear, I don't know how you will hear me in this one, but I will just post this thing on YouTube, so it's recorded. Hi Daniel, any advice for new traders who want to start with trading indices? Because or between forex and indices, which one can you recommend? Okay, which one can you recommend? I trade both because I said it last time, because I'm trading. I'm here to stay. So I can't leave forex or stocks, because some of you, even the other side that you don't know, I also trade shares. I also trade commodities. I'm also a cryptocurrency investor. So yeah, I'm here to stay. So I will try by all means to establish myself on those things which are also real. Ne? I'm not saying synthetic indices are not real. I trade them daily. So you can trade them, but I will also recommend you having a currency account on the side, having two accounts. Ne? Fund that currency account, maybe have a micro account where you'll find with $10 and trade for a long period of time. Ne? But have it on the side to just have that grasp of a real market. I hope it's making sense. So I can hear. Okay. Yeah, trade both. You need to understand how market behaves, ne? Currencies, because some they say it's better indices. There are no fundamental news, but fundamental news are part of the reality of investing or trading. So you also need that feel. Ne? So trade both. That's what I recommend. All of you, trade both. How much do you advise beginners to start with? I mean the amount, more especially those who first-time funders. I cannot actually recommend a fixed amount for you guys to fund your accounts, ne? Because we have financially we are different. We are different. Some are rich, some are poor, you see. So, and the good thing is that the market have given opportunity for all of us through leverage, through micro lots or mini lots. So if you can't afford $1,000, then fund with $10, and you can be able to grow that account. That's where we all started. We fund small, we are able to grow those accounts. If we lose, we wait for another opportunity to get money, and we fund again. So fund with what you have. If you have $5, start with $5. We are blessed to have these things like micro accounts. You can fund with a very small amount and trade. So it's all all about what you have in your pocket. But the best thing it is starting with a big amount. If you have $50 as your bigger amount, start with it. Don't start with $10 yet you can afford $50. That's bad. But the first step is demo. That's the first step. Demo. Let's trade those billions on demo and see where we take them. Ne? The brokers, they give us millions to trade with on demo. So let's trade them. Yeah, I think it's new. Is it true that there is only W and M formation on V75? W's and M's, they are in every market because it's the structure of reversals. Ne? Sometimes the market reverses with double tops, sometimes the market reverses with double bottoms. So it's not only on indices, it's in every market. Ne? So we are running out of time. We are running out of time, guys. So those questions which are not answered, if the question is really burning you, if the question is really burning you, you can drop it on my inbox, either on WhatsApp or on what is this thing, on Telegram. I will answer it if the question is really burning you. Or if it's just a question which is normal, maybe we're going to do another webinar, but it will be up to you. I will hear your recommendation. So we are out of time, guys. I appreciate your presence today. By man, I like your advice and your ethics. A people's person. How do one interact with you? If you want to interact with me, just WhatsApp me, Just WhatsApp me. Let me send you your number. Just WhatsApp me. But my number is everywhere. 268-79156163. Yeah. So that's it, guys, for today. Thank you for joining. I will also pronounce when we meet again.